Right, okay, let's try that again. I think rather than unmuting, I may have muted myself there instead. But just like I said, I wanted to say thank you everybody for joining the call. It's I think if I'm correct, and correct me if I'm wrong, it's week 6. No, week 5 of the fifth session of 6 calls. So we every single week the numbers keep going up and down. Everybody has the opportunity to watch the replay, and I think we're going to re-strategize on that one as well. But we welcome Krishak. Krishak is a very young, very experienced educator in the Forex industry, has been working with many, many entrepreneurs who want to develop their Forex learning skills. I had a question from the field, so I'm going to answer that this week and last week. What is the difference between our calls on the Monday and the Wednesday? Essentially, both are related to Forex trading. The only difference would be that Monday's MyQFX calls are associated with the MyQFX platform, how the proprietary software can enable you to trade, and are slightly more advanced. It's established mainly for those who's more familiar with the Forex markets and are reading the markets live with the analyst Ashraf Noor. However, the calls we have today on a Thursday are looking at the fundamentals of Forex trading, and we have, I believe, over the last few weeks gone through quite a lot of content. So the one thing that I always say about Krishak is that Krishak teaches in a very simplistic manner. So Krishak, I'm trying to find where you I can put you onto the spotlight. So you are a co-host and I can see you are there. I'm just trying to see if I remove myself and how I can replace you. And the way he teaches everybody is very, very simple and very easy to learn. So that's the key thing that I've taken away. And I've been making lots of notes, and every week I've been able to build on my previous learning. So Krishak, welcome again. 5th session out of 6. You can see that people are popping in now as the time 6 has just surpassed. So I'm going to allow you now to take over because I know that time is precious and we literally have 1 hour for this call. Krishak, over to you.
Thanks a lot, Shazia. Thanks a lot for this wonderful introduction. It's always been a pleasure talking to all the members of QBN, my QBN, and sort of, interact with them. And it's lovely seeing everybody who's been with us since the first session, since week 1 of uh, the sessions. Well, I think people are still joining, Shazia. Shall
Yeah,
we give
the
it a
audience
minute or
is
we
picked
can?
up. But I think if you start with a recap, that will be great. And then by
Sure.
then, when most will settle in and we'll be ready for the new content.
Sounds good. Let me share my screen. Just a second. I have to get my screen set up. Just a second.
So just a reminder, I think last week we were looking at different trends. Real money is made in between the trends. That's the key phrase that I remember from last week. So do not get misled by the tops and bottoms. I'm not using the same language Krishak used, but that's what I remember. So it's about not being too greedy. Never predict the tops or bottoms. Never be greedy. Be okay to take a loss. And real money is made in between the trends. Was I correct there, Krishan?
You're 100% correct. Yes. Well, the recap's already been done, I think. That was a good, those are a good few pointers. So let's look at what we had done in the previous session. So we did talk about trends, trends meaning what is a trend? Let's start from the very basic of what a trend is nothing but determining or predicting the direction of the market. This is a trend, right? Trend can never move in a straight line. Trend can never move like this. Trend will always move in waves, which is impulse, correction, and impulse. This is how a trend's gonna move. Um, so trend moves in waves. known as impulse and correction or corrective wave. What is an impulse wave? Impulse wave is nothing but the main direction of the market. This is an impulse wave, which is the main direction of the market, where the markets are heading. If the markets are going up, that the main direction is going to be the longer wave, which is the impulse wave. And corrective wave, on the other hand, is exactly the opposite of impulse, which is against the main direction, right? So if you want to label something like this is impulse, corrective, impulse, corrective, impulse. Let me label it for you. The longer wave will always be the impulse wave, and the shorter wave will always be the corrective wave. This is what we looked at. In case if the corrective wave, for example, breaks, if the corrective wave is longer than the impulse wave, there is a possibility of change in trend. The trend can go bearish. From a bullish trend, which is going up and up and up, the trend can start going bearish. So the corrective wave is always a shorter wave. And in case if the corrective wave becomes bigger than the impulse wave, then we have a change in trend. The money is always, I'm going to keep repeating this because this is a very important statement. The money is always made in between the trends and never, never in predicting the tops and the bottoms. Before a trend starts, we always get some sort of a confirmation that the trend is going to change, right? Confirmation as in it is some sort of an indication that a trend can change. But does that happen all the time? No. It is a confirmation or it is an indication, meaning that there is a high chance of a trend changing, right? But it does not mean that the trend is going to change 100% of the time because there is nothing 100% sure in the markets. The markets are sort of in a way where it does not care what we think of, but it does what it has to do. The market does what the markets have to do, right? Irrespective of what you think the markets are doing, it won't really care as to what you're thinking. If you're looking to buy, if you're looking to go short, if you're sort of trying to wait and see the market will do what we have to do. We have to sort of adapt to the market, meaning if the markets are going up, we always look for buying opportunities. If the markets are going down, we always look for shorting or selling opportunities. Because as a trader, now this is actually the best part about being a trader. Money can be made in an uptrend as well as in a downtrend. But you have to be on the right side of the market. But as an investor, what does an investor do? Only buys, which is only invests, and sells when they see profit, right? This is what investor does. Investor is somebody who only buys and can only see profits when the price moves up. But as a trader, you can see profits when the price goes up. You can also make money when the price is falling. You just have to be on the right side of the market, meaning you have to predict the right direction by looking at what the markets are doing and sort of base your trades accordingly. Let's move on. Classification of trends. When you talk about classification of trends, there are three kinds of trends that we looked at in the previous session: uptrend, downtrend, and consolidation. We did have very interesting questions. Can you hear me? I think
Yeah,
I
I think we can hear you now.
okay, perfect. Thank you. So in the last session, we did have very interesting questions on uptrend, downtrend, consolidation. What happens? How do you enter when the markets are pushing up? How do you enter when the markets are falling? What do you do in a consolidation when the markets are consolidating? Let's do a little recap on what happens when the markets go up, down, and sideways. Price creates higher highs and higher lows. Look for buying opportunity. Candle has to respect, or the price, let me rephrase it, please. Price has to respect the previous low to continue pushing up. So when you look at an uptrend, let's say this is how an uptrend is formed. Impulse, corrective, impulse, corrective, impulse. We spoke about something called as higher highs and higher lows. What is higher high? I'm going to write this in a short form. HH is resistance and higher low. HL is support level. Higher high is called a resistance level, meaning the peak of an uptrend, which is this peak right here. So this becomes your HH, higher high, also called as a resistance level. A higher low is at the bottom, the valley. This is called the valley. So higher high, higher low. So this is your support level. This is where you're going to buy. This is going to be your entry point. So you're going to buy here and take your profit either here, profit target will be at the higher high or at the next higher high. So you have two profit targets. It could be at the previous higher high or the next higher high, right? So these are the two profit targets that you could look for. Now, since you're buying opportunities always at a higher low, does it mean if you miss this opportunity, you're going to get a second opportunity to buy? Because your buying opportunities will always come at higher low, and this becomes your new higher high. So higher high, higher low, higher high, higher low. This is again your buying opportunity, and you can ride the trend again, right? Does this mean you're predicting the bottoms or the top? No, this does not mean you're predicting the tops or the bottom. You're going with the trend. You're going with the flow, right? You're not predicting the tops and the bottom. Predicting tops and the bottoms is when the trend is reversing, meaning when there is a downtrend, and you're trying to capture the bottom of a downtrend. This is predicting tops and the bottoms. This is when we say you're predicting tops and the bottoms. But riding the trend does not mean you're predicting tops and the bottoms. It means you're going with the flow of the trend. Because this is how the trend flows. The trend is never going to move in a straight line, right? This is how the trend flows. I hope this is clear. Any doubts, folks, with an uptrend? Feel free to drop down your questions in the comment box and we can take it right now if there are any questions. Let's look at a downtrend. What is a downtrend? I don't see any questions. Okay. Let's look at what a downtrend is. Downtrend is where price creates lower lows and lower high. It is completely opposite of an uptrend. Uptrend was higher highs and higher lows. Downtrend is lower lows and lower highs. Please don't get confused. I know a lot of people do get confused in the beginning because the wordings are more or less the same. But once you get a better understanding of how a trend is formed, it's much easier to sort of follow the whole trend. Look for shorting opportunity. A shorting opportunity will always come in a downtrend. Never look for buying. Price has to respect the previous high to continue pushing down. Let me explain the last point actually. Price has to respect the previous low. This is for an uptrend. Price has to respect the previous low to continue pushing up, meaning if the price has to continue pushing up from this point, it should not break the previous low. Previous low is nothing but the previous higher low. It should not break the previous. It can come to equal levels. It could be at equal levels. That is completely fine. That is no problem at all. But the price should not break the previous low. If it breaks the previous low, then there is a possibility of change in trend. Unless and until there is a higher high being formed above the previous higher high, or even if a higher high is, even if a higher low is formed here, it is completely fine. Or even if higher lows are at equal level, it is completely fine. But the higher low should not break the previous low. This is where a possibility of change in trend can come. Um, I hope the third point is clear as well. Let's look at a downtrend. Impulse, corrective, impulse, corrective, impulse. Lower low is your support level. Lower high is resistance level, completely the opposite of an uptrend. This is impulse wave in a downtrend. This is an impulse wave in a downtrend. So what is this level? This level is a support level. What is a support level? A lower low. What is a resistance level? That is lower high. Lower high is a resistance. This is your selling opportunity. This is where you would go for a short position right here. So this is where you would sell, and your profit target would be somewhere here down below. So this would be your selling opportunity. A lower low gets created again, and then a lower high, a new lower high is being created. Now, price has to respect the previous high to continue pushing down. What does it mean? Lower high is your resistance. If the price comes equal to the previous resistance, it is completely okay. If it breaks, the change in trend can happen. If it is below, it is perfectly fine. This is what it means. Let's look at consolidation. I'm going to write it down here. We have enough space. Consolidation meaning price is moving sideways. Price is moving sideways, meaning there are equal number of buyers and sellers. Equal number of buyers and sellers. If there are 10 buyers pushing the price up, there are 10 sellers pushing the price back down as well. So what do you do in this scenario? Nothing. This is how the price moves. What do you do in this scenario? Nothing. Wait and watch. Wait and watch. Buyers will push the price up. Sellers will push the price down. Wait for either of the buyers or the sellers to take control of the markets and then ride the trend. This is what we are going to focus on today's session, is focus on the trend as to how do you identify that the trend is going to start moving up, or how do you identify that the trend is going to change. This is going to be the topic of today's session. So what do you do in consolidation? Avoid trading. Do not trade the consolidation or sideways momentum. Always avoid trading the markets when the markets are moving sideways. Any doubts, folks? Any doubts with any doubts with shorting? Anybody who has any doubts with what shorting is, what going long is, how to sell, how do you make money in a downward market? Any doubts with these terminologies? Because as a trader, it should be very clear to each and everybody as to how do you make money in a downtrend. Everybody knows how to make money in an uptrend, but do you know how to make money in a downtrend by shorting? Let me know in the chat box, please, and we can move ahead. I don't see anything. I think we can move on. Okay. Which chart should we follow?
Yeah, one question's come up. Which one chart should we follow for short-term trade? Abdul Samad.
What asset are you talking about, Mr. Abdul Samad? Is it FX or is it some other asset? Sh Chart in the sense, are you talking about time frame or are you talking about a particular asset? Time frame. Good question. Depending on your goals, Mr. Abdul Samad, meaning that if you're a scalper, I'll write it down for you. If you're a scalper, try to focus on 1 minute, 5 minutes, and 15 minutes time frame, right? This is your scalping time frame. If you're a day trader, so scalping is basically you're in and out within few seconds to few minutes, where you take multiple trades. Day trading is when you focus on multiple time frames altogether, but your entry time frame should be either 15 minutes. It should start with 30 minutes actually, because higher the time frame, better the confirmation. I'll write that down for you as well. 30 minutes, 1 hour, and 4 hours. Swing trading should be 4 hours, 1 day, 1 week. This is how you should sort of look at your time frames depending on your style of trading. So if you're a day trader, try to focus on these three time frames. 30 minutes should be your entry time frame. 1 hour and 4 hours is where you mark support and resistance level. Whereas scalping, 15 minutes and 5 minutes is where you mark support resistance. Entry time frame should be 1 minute. Swing trading, 4 hours entry time frame, 1 day and 1 week is where you mark support and resistance level. Um, but entry, the reason why you shouldn't go anything below than 30 minutes when you're day trading is higher the time frame, stronger the confirmation, and less noise. The higher the time frame you go, you'll always have stronger confirmations, meaning the candles take their own time to close. Unlike the minute chart or the 5 minute chart where the candle closes every minute or every 5 minutes, right? That's why try to focus on higher time frames. I would suggest, in my opinion, I would suggest try to avoid scalping. Focus on day trading or swing trading, or if you are a beginner, focus on swing trading only for now. Because you will see cleaner moves, you will see cleaner candles, and you will have a better chance of profitability in the markets. I hope that answers your question. All right. I don't see any other questions. We can move ahead, I think. Okay. If you want to wait, I'll just take this question, Shazia. If you want to wait for longer time, then what is the best approach? If you want to wait for longer time, then what is the best approach? Longer time in terms of entering or in terms of waiting for your take profit to be hit? In what sense?
Profits to be hit. She said the latter, which probably means the profits to be hit.
Well, it's a game of patience, right? Either now there are only two opportunities in the markets, which is your stop loss gets hit or profit target, right? Always be patient. If you have planned a setup, make sure that um, you don't exit in the middle of the trade unless and until the price starts to move sideways and you feel that there is better opportunity elsewhere, then yes, then you can get out of the trade. But make sure that you trade during high volume times. This is where you won't really have to sort of fold your hands and sit and wait for your take profit to hit because the volume time is anywhere between 8 a.m. Eastern to 11 a.m. Eastern. This is a high volume time. So this is where you see the price moves very quickly. There's a lot of price movement coming in, and this is the best time to actually. This is actually when I trade 8 a.m. Eastern to 11 a.m. Eastern is when I trade the most. And this is when I'm the most active. Since London session is open, New York session is also open. There are two sessions, so it's called London and New York overlap. London and we did touch base on this, I think, in the second session, if I recollect, second or third session, if I recollect. But this is London and New York overlap. Overlap. All right. Think we can move on. I hope that answers your question. All right, let's move on. Today's topic is going to be how to identify change in trend. This is today's topic. How do you identify change in trend? The first example is downtrend to an uptrend. Now, everybody's clear with what an uptrend is, what a downtrend is, and what a sideways momentum is. Let us look at how does the market change from an uptrend to a downtrend. When the markets are in a downtrend, what happens? Price forms lower lows and lower highs. Lower lows being your resistance level, lower highs being your support level. And what happens in an uptrend? Higher highs, higher lows, support and resistance. Let's say the markets are pushing down. Impulse corrective, impulse corrective, impulse corrective, impulse corrective. Okay. Let's say this is a downtrend. Lower lows, low highs, lower lows, low highs. Let's just label the most recent lower lows and lower highs instead of, sort of labeling the whole. Okay. The price is moving down. It's all fair and square. The price is going down. Yeah, you see a downtrend to a point where there is no lower low being created. There is no lower low being created. There are equal lows being created, or there is a low which is higher than the previous low. Let's say there are equal lows being created. I'm going to put this as white in color. Let's say there are equal lows being created, right? And this is your support level. So a support level has been formed already. A support level has been formed already, right? So this becomes your equal lows. Now what happens? The price starts to bounce back up. It does not form a new low, but the price goes back up, comes back down, and it starts to consolidate. The price is starting to consolidate now. Now the price starts to consolidate, and then you see the price breaks through. Let me change the color to blue. Now you see you have equal lows and you have equal highs being created as well, right? So this is a consolidation range. The price is consolidating, wherein you don't do anything. The price breaks the resistance. The price breaks through the resistance, signaling that a change in trend, the change in trend can happen. Price comes back down, resistance turning into what? A support level. And then this is how the price starts to keep pushing up. Now, what happens when the start pushes up? Higher highs, higher lows. So this resistance level right here, this resistance level, lower high, This resistance level right here becomes your support level here. And this is called change in trend. So where does the change in trend happen? The change in trend is happening from this point. Change in trend is happening from here and not from here, not from the bottom. It is not happening from the bottom. It is happening after the resistance is being broken, retest, and then the market goes up. A lot of people try to predict the top bottoms here. This is just an indication. The markets could still move down. The markets could still move down easily if there is a lot of selling pressure. But what we see right now is just an indication that a change in trend might happen. And what confirms a change in trend is when the markets break the resistance level, comes back down, forms support, which is your higher low forms, and higher highs keep forming. This is what creates a change in trend phenomena. From a downtrend to an uptrend. Let me explain it to you again. This is a downtrend. This is where the markets are pushing down. This is a downtrend. Price consolidates, meaning it moves sideways. It is moving sideways here. This is where it's moving sideways. And at this point, price breaks the resistance, now turned into support level. Price breaks the resistance. This is the breakout. This is when the price breaks the resistance, comes back down, forms support, and then you see a change in trend. Keep in mind, a change in trend is not done from the bottom. This is more or less predicting the bottom, right? Whereas, of course, the price can keep pushing down as well. So this is sort of, you're predicting where the bottom is. This is, we cannot predict. A new bottom could also be even lower. It could also be even lower. So if such a phenomena is happening, and if you are able to identify that the price is consolidating after a downtrend, wait for the price to push up, push through the resistance, or push down below the support to get a better confirmation that the trend is still going to continue pushing down. But when the price consolidate, avoid trading. Never trade when the price starts to consolidate. I hope that's clear. Let us actually look at an example. Let me remove the drawings just a second. Okay, let's look at an example, right? Let's look at Euro USD. Let's look at the most basic pair, Euro USD. What happens here? Let's look at this. What happens here? The price, yeah, there you go. What happens here? The price is creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. What do you see now? Equal lows. You see equal lows forming at the bottom. You see equal lows forming at the bottom. So can we say that this is our support level? The price can potentially push up from here, potentially, right? It is indicating, but it is not confirmed yet. Can we say this is our resistance level? Resistance. This is our support level or equal lows. And we can write here, we can add equal highs. The price is more or less consolidating. The price is more or less consolidating right now in this range, right? It's not moving anywhere. What happens? What do you see after the price consolidates? it starts to push to the upside. I'll change this color. Just bear with me just a second. Let's say this is white in color. No, it's merging with, let's say this is green in color. What happens? The price pushes through the resistance, comes back down, confirmation, and then the price goes up again. So what happens after that? You can see the price forms higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is how the price is moving right now. This is your higher low. This is your higher low, higher low, higher low, and higher high, higher high, higher high, higher high. This is a live example of how the price changes from a downtrend, consolidates at the bottom, and then starts pushing to the upside. Downtrend, let's just quickly go over it. A downtrend, price is creating lower lows, lower highs. Consolidates, this is where we don't do anything. Consolidation is where we avoid the zone and we do not trade at all. Price breaks through the resistance, which gives us an indication that buyers are in control. The buyers are trying to push the price up, comes back down. So resistance turning into what? Support level. This is where resistance turn into support level. And then the price starts to push to the upside again. This is what we would like to capture and stay away from this part. This is what we would like to capture above the resistance. Any doubts? Any doubts, folks, with the change in trend from a downtrend to an uptrend? If not, we can move on from an uptrend to a downtrend.
I can't see any questions, but I do know that some new individuals have joined, so I've just shared the replay link with them in the chat, so that they can catch up, and the fact that we will have a new cycle starting soon.
Right. All right. I don't see any questions as well. I think we can move on, Shazia.
Yep, sure.
All right. Let's look at, anybody would like to take a screenshot of this? I'm sorry, I forgot to ask, but anybody would like to take a screenshot of this? Feel free to take a screenshot. Yep, and this is the live example. And if anybody would like to take a screenshot of this as well, feel free to take a screenshot of this as well. All right, I think we're good to go. Let's look at, since we have looked at downtrend to an uptrend, let's look at uptrend to a downtrend. Uptrend to a downtrend. We'll be using the same phenomena. Let me bring this down so I don't have to write it all over again. Just a second. Okay. Okay. How does an uptrend form? Oops, I think I lost the material. Yeah, let me write it again. How does an uptrend form? Higher highs and higher lows. This is how an uptrend is formed. So this is your higher high and this is your higher low. Let's skip to the top where the change in trend can happen. Let's look at this. Let's zoom in and look at this. Let's say this is an uptrend. What happens? The price comes back down to a higher low or a little above higher low. but still the previous higher low is being respected, which is fair enough. Fine, no worries. We are still in an uptrend. The price goes up. What happens? The price goes to a point where this higher low is equal to this higher low. So both the higher lows are equal now. So both the higher lows are equal, which forms a resistance level. Now what happens after this? The price starts to consolidate for a while, meaning you have a support level forming and a resistance level forming. Support and resistance, both the levels are formed. Higher low is your support level, higher high is your resistance level. What happens after this? We wait for the price to break below, correct? We wait for the price to break below the higher low, come back up, and this is your downtrend. Let me put this as red in color so we can distinguish. Lower lows is your support level, and lower high is the resistance level. Lower low, lower high, lower low, and then we have another lower high. What is this point called? This is a support level. Support level, and this is the resistance level. The price breaks the support level, comes back up. So support turns into what? Resistance. Support turning into resistance at this level, right at this level. And this is going to be a shorting opportunity. And what is this? This is consolidation. This is where the price was consolidating, where we stay away from the markets. We don't try to predict the tops. We never try to predict the tops. We never try to predict the bottoms in a downtrend. And we don't try to predict the tops in an uptrend. But what we know is the price can break through the support level, meaning a potential change in trend can happen, goes back up, and a downtrend starts. Let's look at a live example. Anybody who would like to take a screenshot of this, feel free to take a screenshot. This is a quick observation of an uptrend to a downtrend. All right, I think we can move on. Let's look at the live example. Let me try to clean the charts just a second. All right. Let's zoom in. Let's zoom in into the charts and look at the live example. Can we say that this is an uptrend? Impulse, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, equal highs. Let me stop right here. Equal highs. So this is higher low, higher high, meaning we have equal highs. When we have equal highs, what's happening in the markets? Resistance and support. Clear? This is a clear example of a support forming at higher low and a very clear example of resistance forming at a higher high, where we say that there are equal tops, right? But are we predicting or are we sort of assuming that the markets are going to fall? No, there is no indication as of now, no indication at all. What happens? The market starts to move sideways for a bit. The market starts to move sideways for a bit. And then you see the price breaks below, retest, goes back down, comes back up. So this point right here, I'll change the color to red. This point right here is a change in trend. This circle that I drew, a higher low changes to a lower high, which is resistance. And a higher low is nothing but support. Changes to resistance. Then we have lower low, lower low, lower low, and the market keeps pushing down. And then we have lower high and another lower high. Anybody who would like to take a screenshot of this, feel free to take a screenshot of the live example. All right, I think we're good to go. Any doubts, folks? This is how we predict lower lows, lower highs, change in trend, higher highs, higher lows, from an uptrend to a downtrend, and from a downtrend to an uptrend. Let's give it a minute, Shazia, if there's any doubts. And do we have time to take on the next topic?
We've got about 12 minutes, according to my clock.
Mm-hmm.
Any questions, folks? Any comments? You can unmute yourselves. You should be able to, if that's something that you'd like to do. Ask anything. Paola,
It can
anything?
be anything.
It's only because I can see you with the camera on. Cedar, Eileen, Judith, K, Dr. K. Everybody's quiet. I think they're all concentrating.
Mm-hmm. Thanks, it's clear. Everything's clear to everybody.
Well, let's see lots of emojis showing that everything's clear. I can see hearts coming up, so it seems like, and thumbs up, so all clear.
Mm-hmm. All right, I think we can take on a quick, small topic since everything's clear. Thank you for your reactions, folks. Appreciate it. Let's take a quick look at a very small topic. There are different ways to identify trends. And how do we do that? Let's look at it. Different ways to identify trends. A very small topic, um, but of course, very effective in identifying the markets. Less is more in trading. I'm in the markets for about 6 years, but whenever I do webinars, whenever I do sessions, I know that I learn something new in every session I do. Every session. Even though I know the concept, it sits in the back of my mind. It's lost somewhere in my mind when I sort of, you know, talk to somebody about the sessions. It really sort of comes up, and now I feel that, yes, this is something that I knew and I could sort of improve when I look at this concept. So let's look at this concept on different ways to identify trends. There are three ways to identify. The first way is trend lines. Trend lines is nothing but diagonal line, a line in the direction of the main trend. A trend line should have 3 touch points. This is a minimum of 3 touch points. 3 touch points for a valid trend line. Less than 3 touch points, the trend line is still in formation, but a trend line should have minimum of 3 touch points. How would you buy? Let's talk about buying. How would you buy? Using a trend line is wait for the price to come near the trend line and bounce up, forms support. This is where you buy. So let's say if the trend is pushing up like this, in an uptrend, this is how an uptrend pushes: impulse, corrective, impulse, corrective, impulse, uh, corrective, another impulse. What you do is you take the trend line tool. This is the trend line tool. You connect the first point, the second point, and the third point. You connect it like this. As the price comes near the trend line, this is where you buy. Buy, buy. These are your buying opportunities. So you know that the direction of the trend is up, right? This is where you sort of keep buying and keep pushing up. If the price comes back, buy again, take advantage of the markets, right? In simple words, what is this? Higher high, higher high, higher high, higher high. And where are you buying? It's the same concept, but a different way of identifying higher low, higher low, higher low. It is exactly the same concept of how we looked at higher lows, higher highs, but in a different way using a trend line. We are using a trend line here, right? But the concept is the same. All the concepts are the same, but there are different ways of identifying a trend. I hope this is clear. The next way is moving average. The next way is moving average. Moving average is an indicator uh, where you could sort of use TradingView from here and you can type moving average. It is an indicator where it calculates the past 21, 50 candles depending on the length of the moving average and then sort of marks support and resistance for you automatically. So moving average is an indicator where you sort of, you can let the price do its job and you can let the indicator itself do its job without marking support and resistance. But my advice would be indicators are always used as an extra confirmation and never the main strategy. The main strategy should always be based on uh, the candles and the price. This should be the main strategy, but the main strategy should never be based on indicators. Because what is the meaning of indicators? It is indicating you, it is giving you an extra confirmation, but your main strategy is something else. That should be whatever your main strategy is, apart from the indicators, it should be your main strategy. Indicators should only act as your confirmation. The third way to identify the trend is marking support and resistance levels. The third way of identifying is marking support and resistance level, meaning where the price is falling from. Support is where the price is going up from. We did look at these levels a lot of times, so I'm sure it would be a little bit of a refresher for folks who are there since the beginning of the series. Well, I think we can wrap up. We do have about 5 minutes. We can take up for questions if that's okay, Shazia, or if
Yep.
anybody wants to discuss some other topic. Uh, I would love to know as to anybody who's trading part-time, full-time, who's beginning in the markets. I would love to know their experience in the markets, in the FX markets or any other markets, as to what have they learned, what do they follow, and how's their trading or investment journey been.
Anybody, any comments? Even just generally from the sessions, those of you who've been on the sessions every single week, would you like to share anything of your learning? I mean, I did a big recap last week, so that wouldn't be fair if I had to do it again. But have you seen the progressiveness? Is there any feedback that we need to implement in future sessions? Just want to say a huge thank you to those of you who've come in every single week. I would say a massive round of applause because it shows your commitment, your dedication to the session. So thank you. I want to say a huge thank you to Krishak for, again, every single week inspiring us with his knowledge, breaking it down, teaching the theory, and then demonstrating it on a real time with a real-time example. So thank you for that, Krishak, as well.
No problem. Thanks a lot, Shazia. Well, it's not just about learning, but it's a skill that everybody needs to acquire in a way that can lead to financial freedom. And theory is one thing, but practical is the other thing. A lot of people usually look at the diagrams, which is just projections that they draw. But I would really like to, look at examples, live examples on the chart while we are also looking at the theory part of it, drawing lines and so much and so forth. Um, but looking at live examples, live charts in these sessions can really progress your trading, training, whatever, you're sort of aiming for. It can really progress it in a way that if you keep looking at the same patterns over and over again, you would be way, way, way ahead of 90 to 95% of the people who are still trading. Yeah, I see a lot of comments. Thanks a lot, everybody,
I would
for
like to
such a
add,
beautiful comment.
Krishak, that Krishak is available for one-to-one sessions if you are interested, and that would take you on your new trading journey. If it's something that you are looking to do in 2026, based on the sessions we've had, can you imagine where you can be when your hand is held from the basics to the knowledge to implementation in real markets? You will, I think, will gain a huge benefit from the 25 session program we have. So again, if you're interested, I've had a few emails come through this week showing interest, but you can email hello@myqminds.com and we can arrange, I would say, a discovery or a introduction call with Krishak to see if it's something that fits in with your plan, vision. We all have these New Year resolutions, right? You never know. It could be your first step to financial freedom as a professional trader yourself. So just wanted to put that in for you, Krishak, as well. I
Thanks a
know
lot. Thanks a
Mahir,
lot,
our
Shazia.
co-founder, has had sessions with yourself. If you can just quickly give us a synopsis, how and when you started working with Mahir Awad, he's one of the co-founders of QBN, and where he was in his trading journey and where is he now? It can give people a real contextual example, please.
Sure. Mr. Maher, the co-founder, we actually got in touch, and it's been a couple of months now. I assume it's well over 3 to 4 months now since we are in this together. Is when he started trading, when he used to sort of, you know, um, do the trading by himself, there used to be a lot of doubts, a lot of its and bits. But then as we started to progress, uh, is when he sort of got a grasp of the sessions. We did speak about a lot of topics, and now he trades by its own. He trades on its own. He does make his own trading decisions, and he sends me the charts, asking for my feedback, and I love helping people. So I'm very grateful where Mr. Maher right now is in his trading journey, where he's able to make independent trading decisions by himself, wherein I'm just guiding him now and he's making all the decisions by himself. So that's lovely. Just in about, I think, 4 months, I assume, just in 4 to 5 months, I assume.
And it was Maher who actually found Krishak and brought him to QBN because of his own personal trading journey. And we are all therefore benefiting. I can see in the chat, thank you everyone for your lovely feedback from yourself. Thank you for a great session. Thanks. This was a good one. Krishak would love for you to share your trading deck in one of the sessions. I want to learn, but it's difficult for me, but will succeed. Nothing, yes, everything, but you could all do it. It's mindset, it's a decision, right? We just need to make it happen. But thank you. So if, Krishak, if you could kindly unshare the screen, I'm going to take a
Sure,
screenshot. If I like
sure.
doing these selfies, but not everybody turns their camera on. This is the issue here. So I'm just going to try and remove you from the spotlight. So if you'd like to be part of a selfie, guys, thank you, Laini, for turning your camera on. I will take a screenshot and then that will be it. And anybody else who'd like to take a screenshot, I guess, can take one as well. Let me just move the screen over. So thank you, everybody. We look forward to seeing you next week. Same place, same time. It will be the 6th final session of our series. And we will then have them all on YouTube for you to watch. But we will start again. One thing is clear. When you come on the live session, this is my personal experience, you actually benefit more because you participate live, when you watch the videos and replays, I don't know about everybody else, but I start snoozing because the concentration level is not the same. So my advice is come in every week, make notes, go away, implement, and see the impact. Once again, thank you, everybody. And we look forward to seeing you next week. Thank you, Krishak, as well. One more time.
Thanks, Shazia.
Take care.
See you.
Good night, everyone.
Bye-bye.
Bye-bye.